Just made there. Meanwhile, breaking news moments ago, 267,000 Americans filed for jobless claims last week, and durable goods orders dropped 2% last month. That was in line with economists' expectations. We want to get reaction to this as the markets react. We've got Putnam Investments President and CEO Bob Reynolds. Bob, I want to get your take on some words from Bill Gross, the bond king, making waves with comments on the Federal Reserve, saying Americans are being, quote, cooked alive by zero interest rates. Do you think zero interest rates are hurting the U.S. economy?
They're certainly not helping, as obviously you can see by the economy. I think he's talking about individual investors, especially the baby boomers that are retiring, people that are taking annuities, things like that. Low interest rates has certainly hurt their standard of living, or at least what they thought they were going to have in retirement.
All right, so we do have these economic numbers out right now, Bob. They're pretty much in line with estimates. You seem to be pointing to an economy that has not been helped out by the zero interest rate environment that we're in. So are you seeing a lot of weakness in the economy? Are you not liking what you're seeing then?
No, we like what we see in the U.S. economy. I mean, when you look at corporate earnings, the reduction of debt by individuals, the condition of banks in the U.S., we're very bullish on the U.S. And right now, the U.S. economy is being affected by what's happening around the world. And certainly, it's been one that uncertainty is never the friend of the market. That's for sure. Yeah,
and Dagen, I want to bring you in here because Bob's saying he thinks that he was talking about the average investor, the retail investor, which Bill Gross was. He was referencing the zero-bound interest rates destroying the savings function of capitalism, as he put it, and he made reference to retirements, et cetera.
Right. Bob can speak to this, too. Hey, good to see you, Bob, by the way.
Hey, Dagen.
What these low interest rates have done is sent people who need income. I said this earlier. But this happened during the financial crisis as well, where people took on undue risk because they were looking for yield or looking for income. And you have seen that in recent years. People buying master limited partnerships and then getting taken to the woodshed when oil prices collapsed. Have you seen that, Bob?
We have not seen that. I mean, if anything, the investor is sitting on their hands right now. Individual cash is at all-time high, even pre-Lehman. The level of cash held by individuals, very, very high. And then the cash held by corporations, we all know, are at record levels. So if anything, this uncertainty has frozen everyone in their place, and people aren't in the market like you would think they would be at this time.
All right, Bob, so what excites you right now when we look at these markets? Obviously we've got a lot being thrown at us. Simplify it for us. What excites you?
Well, in investing, everything depends upon your time horizon. And obviously, the longer your time horizon is, the more predictable investment returns are. But as I said earlier, we're very bullish on the U.S., what's going on in the U.S., innovation. You know, you can go on and on. Higher education is the best in the world. So very, very bullish long-term on the U.S. And I think when you look at countries like China and emerging market countries, over a 10-year period, they're going to be growth stories. Yeah. So to me, it all depends upon your time horizon, and there's a lot of positive things out there. I'm not diminishing some of the problems around the world, but it's pretty bullish right now, especially for the U.S.
We've got to leave it there, Bob. We've got to go. But any specific sector that you like, energy, financials, anything in particular, when you say you're bullish?
Yeah, I like financials. I think the U.S. banks are in phenomenal shape. Low interest rates do not help banks, and I think if you're looking at interest rates today, you'd have to say over time they're going up.
All right. Bob Reynolds, thanks for joining us this morning.
Over what time? I don't get that much time.